The fine print. What's actually hiding in your policy before you ever file a claim? Last time, we showed you how to fight a denial after it happens, but some of the biggest gaps in your coverage are set months, sometimes years, before you ever file a claim, hidden in a document you probably signed without reading closely. Today, we open the file on the fine print. This is claim denied. Case file number 003. The fine print. The clause is quietly limiting what you're actually covered for, long before you ever need to use it. Most people believe they've read their policy because they skimmed the declarations page, the one-page summary with your name, your coverage amount, and your premium. That page isn't the policy. It's the cover of a book most people never open. The actual terms, the ones that decide what's covered and what isn't, lie dozens of pages further in. Every policy is built from 4 layers. The declarations page, which is just a summary. The insuring agreement, which states the broad promise of coverage. The exclusions, which quietly remove entire categories from that promise. And the conditions, the duties you have to follow for the coverage to apply at all. Most people only ever see layer 1. The claim usually gets decided by layers 3 and 4. Exclusions are the clauses that remove coverage for specific causes of loss, even under a policy that sounds comprehensive. A homeowner's policy that never mentions flood coverage isn't an oversight. Flood is almost always excluded by default and has to be added separately. Wear and tear, gradual damage, and certain natural events often work the same way. Full coverage is a phrase people use casually. It's not a phrase that appears in most policies because it isn't actually accurate. Sublimits are caps hidden inside an otherwise larger policy. Your policy might show a coverage total of $200,000, but jewelry, electronics, or business property inside your home can be capped at a few thousand, regardless of that larger number. You don't find this by reading the total. You find it by reading the category limits buried in a table most people skip entirely. Some of the most consequential language in a policy is a single defined term. Actual cash value and replacement cost sound similar. They are not. Actual cash value pays what your damaged item is worth today after depreciation. Replacement cost pays what it costs to actually replace it new. A 5-year-old roof or a 10-year-old couch can be worth a fraction of what it costs to replace. And the difference between those two definitions is often the difference between a claim that covers the damage and one that leaves you paying the gap yourself. Even a fully covered loss can be denied if you miss a condition, a duty the policy requires of you after something happens. Notify the insurer within a set number of days. Protect the property from further damage. Cooperate with the investigation and provide requested documents. These conditions rarely get attention until after a loss, when it's too late to go back and follow them properly. Take a composite case like this one. A homeowner assumed their policy meant full replacement after storm damage to an aging roof. The payout came back far lower than expected, calculated at actual cash value after depreciation, exactly as the policy defined it from the start. Nothing about the calculation was an error. The gap wasn't in the claim, it was in a definition on page 9 that had been there since the day the policy was purchased, long before any storm. 3 things, done before you ever need to file. 1. Request the full policy document annually. Not just the summary, most insurers will send it on request. 2. Search it for 3 terms specifically excluded, sublimit, and actual cash value. These 3 phrases carry more weight than almost anything else in the document. 3. Ask your agent to explain each one in writing, not just verbally. A verbal answer isn't something you can hold anyone to later. The declarations page is the cover, not the book. Exclusions, sublimits, and definitions decide what actually gets paid, and conditions decide whether any of that matters at all if you miss a deadline. Read it before you need it. That's the only point in the process where you have the most leverage and the most time. Next time on Claim Denied, we open the file on the industry's most controversial product, the policy's agents are trained to push hardest, and why that's not always about what's best for you. If this made you want to actually go pull out your own policy tonight, good, that's the point. Subscribe, and we'll keep opening the file every week. Read it before they make you regret not reading it.